Today we are discussing a problem from accounting of issue of shares. Here we are discussing the problem which is based on oversubscription of shares. We know that oversubscription of shares we have studied in the last class also. The oversubscribed shares can be treated by the company in three different alternatives. First, either it can be rejected. Next, we have told that it can be allotted pro-rata basis or proportionate basis, proportionate allotment. And the third one, rejection and pro-rata together. That means the combination of first and second method. So here we are discussing oversubscription in the third case. That means where there is the first case and the second case together. Here is the question before you. You can see that Drive Limited was registered with an authorized capital of rupees 10 lakh divided into shares of rupees 10 each. Company issued for public subscription 80,000 equity shares of rupees 10 each at a premium of rupees 2 each. Payable as rupees 4 on application including premium, rupees 3 on allotment, then rupees 2.5 on first call and the remaining on the second and final call. Applications were received for 1,05,000 shares and directors decided to allot the shares as given below. See here application money 4 rupees, that is including premium of rupees 2. So the real application money is 2 and 2 rupees premium. And here we are getting excess application. Company is issuing only 80,000 shares but the public applied for 1,05,000 shares. And let us see how the directors allotted the shares. First, for applicants of 60,000 shares, full allotment. Those who have applied for 60,000 shares, all the shares are allotted. Then for applicants of 40,000 shares, 20,000 shares were allotted. Then for applicants of 5,000 shares, nothing is allotted. That means it is rejected. Okay. What you have to do? You have to prepare necessary journal entries and prepare and show how the entries will be shown in the balance sheet. Okay. This bank account we don't want. We can avoid this bank account. Okay. We can make how the items will be shown in the balance sheet. And here we can find out the allotment of shares. We can make a detailed analysis of that we have made here. Analysis. This is a rough work for understanding purpose. We can make a column like this. In 5 columns we can make. First category we can give, that is category. Then how much is applied. That means in each category how much is applied. Then how much is allotted to each category and how much is the pro-rata and how much is rejected. This is just for understanding. This comes in the solution part. This is, you can consider it as a working note. So the first category we can say the 60,000 shares. Those who have applied for the 60,000 shares. Let us consider it as first category. How much they applied? They applied for 60,000 shares. 60,000 shares applied. For them all the shares are allotted. So there is no pro-rata, no rejection. That means in that category all the shares are allotted. All applied shares are allotted. In the second category, see in the second category how much they applied? 40,000 shares they applied. For them half is allotted. That means half is the excess. That means it is allotted on pro-rata. Okay, for 40,000 shares, 20,000 shares are allotted. So the remaining 20,000 is pro-rata. This pro-rata 20,000 will be adjusted. That means the application money received for 20,000 shares, 4 rupees each for 20,000 shares. That we will adjust it to allotment, and after that if any excess is there, that will be adjusted to calls. Okay. So there is no rejected amount here. So we can write nil or 0. Then the third case. What is the specialty of the third case? 5,000 shares are applied, or applicants of 5,000 shares, for them nothing is allotted. That means nothing is allotted, no pro-rata, that means full amount is rejected. That means 5,000 shares into 4 rupees. Okay, 20,000 share, 20,000 rupees is rejected. So this is just for understanding purpose. You can consider it as working note. Okay. Now let us prepare the journal entries. Journal entries in the books of Drive Limited. You can write journal entries in the books of Drive Limited. Journal entries in the books of Drive Limited. Journal is ready here. Date, particulars, debit amount, credit amount. See, first journal entry, we know that date is not given, so we need not write any date here. First journal entry we will write, yes, bank account debtor to share application. Bank account debtor to share application, equity share application. Okay, that means 1,05,000 shares application we received for 1,05,000 shares into 4 rupees each, including premium. So 1,05,000 into 4, 4,20,000 rupees. Okay, now let us write the narration. Being application money received for 1,05,000 shares, 1,05,000 equity shares of rupees 4 each. Okay, then what is the next? We will transfer that share application money to, yes, share capital account. So let us write equity share application account debtor. How much we have? 4,20,000 we have. To share capital, how much we will transfer? Only the capital value. That means capital value means we have only 80,000 shares to issue. So 80,000 into 4 rupees. No, 80,000 into 2 rupees. 2 rupees is the capital value. So to equity share capital 80,000 into 2. Then what about the remaining? 80,000 into 2 is capital value. So premium is there. What is the journal entry for premium? That particular call debtor to securities premium account. So here the particular call is equity share application. Equity share application debtor to equity share premium. That means 80,000 into remaining 2 rupees. So here 1,60,000 for capital value. Then premium also 1,60,000. Okay. Now this is the case here. 4,20,000 rupees we have received so far. Okay. Out of that 1,60,000 only we can transfer to where? Capital. And 1,60,000 only can be transferred to securities premium reserve account. Now let us see here, excess application money received is therefore pro-rata. How much? 20,000 we have here. 20,000 into how much rupees? 4 rupees. So 80,000 excess application money we received. If we are opening calls in advance account, we will write share application account debtor to calls in advance. 20,000 into 4. Okay. That means 80,000. Then after that 5,000 shares, here it is there 5,000 shares. 5,000 rejected is there, that 5,000 into 4 rupees. 5,000 shares into 4 we rejected. So to bank. How much? 20,000 rupees. Okay. Then let us complete the narration. Being application money transferred to equity share capital. Okay. Then next what is there? We have to adjust the share allotment on due date. What is the journal entry for share allotment due? Yes, equity share allotment debtor to equity share capital. So we know that allotment money is 3 rupees per share. So 3 rupees into 80,000, 2,40,000. Okay. Then narration being allotment money due for 80,000 equity shares. Okay. Now, what is journal entry? This allotment money receipt entry we have to write. So bank account debtor to share allotment. To share allotment is there. To share allotment how much we have? 2,40,000. Let us write that here, 2,40,000. Return. How much we will get as the bank? That is what we are going to see here. Let us make some calculation, because here we have here we have oversubscription amount, pro-rata amount is there, that should be adjusted to allotment, isn't it? So we are going to see that how it can be adjusted. Let us see that how this oversubscription can be adjusted. See, calculation of or adjustment of pro-rata allotment. Pro-rata allotment, we know that we have, yes, 20,000 rupees we have received as excess application money. Okay, so that particular category, if you consider, that means second category, they have applied for 40,000 shares. So let us write that sentence first. Amount of share applied in that category, how much? 40,000 into 4, that means 1,60,000. Okay, then for them how much is allotted? 20,000 shares only is allotted. So what is the application money for that number of shares? Application money for shares allotted 20,000 into 4, that means 80,000. That means this 20,000 into 4 is the amount of application money for allotted share. That means 80,000 share. Sorry, 80,000 rupees. This 80,000 rupees only they needed to pay. So what is the excess amount? Yes, the excess application money received is 80,000. Is all of you understanding? So total amount applied, amount of shares applied in the second category is 40,000 into 4, 1,60,000. Then for them, how many shares are allotted? 20,000. For that, how much application money they need to pay? 4 rupees including premium. So 80,000 can be deducted from that. So remaining is the excess money that is to be adjusted into, that means pro-rata we are allotting. So it will be adjusted to allotment, and afterwards if there is remaining amount, that will be adjusted to first column. So let us see now how much can be transferred to allotment. So 80,000 is there. 80,000 rupees is there with us. So for them how many shares are allotted? 20,000 shares are allotted. So 20,000 shares, for this 20,000 shares, how much allotment money they have to pay? They have to pay 3 rupees each. That means 60,000 rupees they have to pay for allotment. Okay, for this allotted 20,000 shares, they have to pay allotment money for 20,000 shares at the rate of rupees 3. That means 60,000 rupees they have to pay. But we have already how much? 80,000. That is more, no? So can we transfer all the 80,000 to allotment? No, not at all possible, because they need to pay only 60,000 rupees. So let us write that the amount to be adjusted to allotment. So since the amount needed for the allotted share is less than the oversubscription, we can write like this and transfer that how much is needed, that much can be transferred. So 60,000 will be transferred to allotment. Okay. Then this 60,000 is transferred to allotment. So let us complete that journal entry. What it is, calls in advance. We made here in the second journal entry 2 calls in advance. 80,000 is there. From that calls in advance, how much we have taken? 60,000 we have taken. So calls in advance debtor 60,000. Calls in advance debtor 60,000 to share allotment. Okay. So calls in advance we have 60,000. Total equity share allotment we had to get for 2,40,000. Out of that 60,000 already received. Now how much is to get? 1,80,000. That we have to get from bank, or we will get from bank. Understood? So this is the way of preparing journal entry at the time of receipt of allotment. Let us write the narration. Being allotment money received and adjusted over subscription for 20,000 shares at the rate of rupees 3. Okay, then let us write the next journal entry. Next journal entry for share first call due. What is the journal entry? Share first call debtor to share capital. Equity share first call debtor to equity share capital. Narration. Being first call money due for 2 lakh equity shares. Sorry, how many equity shares? Not 2 lakh. Sorry, it is 80,000 equity shares. Being first call money received for 80,000 equity shares at the rate of rupees 2.5. Okay, that means 80,000 into 2.5. 2 lakh rupees. So 2 lakh rupees we have to get. Number of shares 80,000. Then next, amount received. Amount received. What is the journal entry? Bank account debtor to bank account debtor to equity share first call. So before that, any oversubscribed amount is there or not? That let us see. Oversubscribed amount we have here. Amount to be adjusted to allotment 60,000. What was the balance? Balance is 20,000 left. So that 20,000 what to do? It is to be adjusted to first call. So this 20,000 we will get for first call. Okay. That means allotment over first call also. After allotment 20,000 left for first call. See, first call 2 rupees 50 paise we have to get for each shares. So 20,000 shares were there. For that 2 rupees 50 paise each. That means we had to get 50,000 rupees from them. So can we transfer all the 50,000 rupees here? No, because excess money is less than 50,000. So whatever is left, the entire amount will be transferred. Okay, understood? That is the difference between transferring amount into allotment and first call. In the case of allotment, excess money was more than amount needed for allotment. So what is needed for allotment, that is transferred. Here in this case, excess money is less than what is needed for first call. So all the excess money can be transferred to share first call. Okay, so we will write the journal entry here. Bank account debtor bank account debtor is written. That means bank account debtor how much? 80,000 into 2.5 we had to get, but out of that 20,000 we already received and adjusted. So how much? 1,80,000 only. Out of this 2 lakh, 1,80,000 only, and remaining this 20,000 we will transfer from calls in advance. Okay, calls in advance we will transfer. From the calls in advance amount we have to transfer. So calls in advance debtor, how much? 20,000 we have to write. So total equity share first call 2 lakh. Okay. Then let us write the narration, being first call money received and adjusted the oversubscribed amount. Then next, see here, first call money received, and next what it is? Second call money due. Second call money due, equity share second and final call debtor, 80,000 into 2.5. 2.5 is the amount of second and final call. So equity share second and final call debtor, how much? 2 lakh rupees. 80,000 into 2.5. To equity share capital, same amount. Okay. Then let us write the narration. Equity share second and final call due for 80,000 shares at the rate of 2.5. Okay. Now bank entry, that means receipt entry. Here there is no adjustment of, no money is left for to adjust over subscription. So the full money you should get from shareholders, and that full money is received here. So bank account debtor, that means 80,000 into 2.5, 2 lakh, and to equity share second and final call again 2 lakh here. Okay. Narration. Being share second and final call money received. Okay. That is regarding the journal entries. Now we have to see how to write the balance sheet. Okay. So these are the journal entries we have written, and adjustments also we have written. Now we will see how the balance sheet can be prepared and how the amounts can be shown in the balance sheet. Okay, let us see that. Yes, the balance sheet is ready here. Let us write the heading in the books of Drive Limited. In the books of Drive Limited, balance sheet, that means the extract of balance sheet only we will prepare. That means what is needed here, that only will be recorded. Particulars, note number, amount. Okay. So we know that we have already prepared 2-3 balance sheets. So we know that what is the first heading here. That first heading is, that means number 1, equity and liabilities. Equity and liabilities. In that first item, shareholders fund. In shareholders fund, the first item is share capital. So we will write the share capital here. Share capital, we have to find out what is the total capital, and that money will be written here. So let us find out the share capital. For that, we know that we will prepare a notes to account. So notes to account is ready. There are also particulars, amount. Note number 1, share capital. Share capital, there are various bifurcations. We have to write one by one. Authorized capital. Authorized capital is how much? 1 lakh equity shares of rupees 10 each. 10 lakh. Okay. So since that has no influence here, that will be closed. Then we will write issued capital. Issued capital, how much is issued? 80,000 equity shares of rupees 10 each. So 8 lakh. Okay. Then that also can be closed. Subscribed capital. In subscribed capital, how much is subscribed? Over subscription if it is fully adjusted or repaid, that need not mention separately. So here all the subscribed shares are fully subscribed. All the issued shares are fully subscribed. So we can write subscribed and fully paid up shares. Subscribed and fully paid up how many? 80,000 shares of rupees 10 each. That fully subscribed. Okay. So that is regarding share capital. So share capital we have got here 8 lakh rupees that can be entered in the balance sheet. Share capital, note number 1. Here it is there, note number 1, share capital. So note number 1, how much? 8 lakh is written here. Okay. Next, after that, after share capital, next item is reserves and surplus. So point B, reserves and surplus. Here in the case of reserves and surplus, no surplus is given here, but one reserve is there, which is that reserve securities premium account. So that we have to write securities premium account. So securities premium account, in order to write that, we can write the next account number 2, reserves and surplus. In that, what is the reserve? That we have to write securities premium reserve. From the securities premium reserve, nothing is deducted, the full amount is there. That means 1,60,000. That means 20,000 shares of rupees 4 each. Okay, sorry, 80,000 shares of rupees 4 each. 80,000 shares of rupees 4 each is the application money, but out of that 4 each, 2 rupees is capital value and 2 rupees is premium. So 80,000 into 2 rupees only. Okay, so 1,60,000. That can be written here, reserves and surplus, note number 2, 1,60,000 rupees. So liability side of the balance sheet over, all the entries over here. That means all the extract of entries are over. Now asset side, what is the first heading here? That means point 1 equity and liabilities, point 2 assets, Roman letter 2 assets. Then in that we can write non-current asset first, then current assets. Here non-current asset is not given in the question, so we will write the current asset here. Current assets. In current assets there are various bifurcations: cash in hand, cash at bank, then various items are there, even trade investment is there. So out of that we have here cash and cash equivalent, that we have to write first. For that also we will prepare a note to account, that is note to account 3. That note to account is ready here, note to account 3, cash and cash equivalent. In that, what is cash and cash equivalent here? Here the cash equivalent and cash is the bank amount received. That means money received in the bank for issue of shares. So cash at the bank we will write amount 9,60,000 we received. Okay. So cash and cash equivalent 9,60,000. So let us see balance sheet here. The total of liability and assets are equal. Means we have got 9,60,000 each in asset side and liability side. So this is how we prepare the journal entries and balance sheets at the time when issue shares at a premium and public subscribes more than what the company is intended to issue. That means over subscription of shares. Okay. So these are the things we studied here. So like this you can check it once again and make it cemented in your mind that how to prepare the journal entries, balance sheet, and how to make a statement or working note regarding the treatment of in this oversubscription. Okay, I hope all of you understood this. Thank you.